Well, hello, everyone. Thank you for joining us today for our virtual Open Enrollment Fair session. During today's session, we will go over voluntary short and long-term disability benefits with Lincoln Financial Group. Before we get started, I would like to brief everyone on a couple housekeeping items. All attendees are muted and will be muted throughout the presentation. If you have a question, please type it in the chat box located on the lower right of your monitor. All questions will be answered at the end of the presentation. Be informed that if you type a question in the chat box, everyone attending the session will not see your question nor your name. If you have a question that is confidential, please contact the Benefits Division directly. Lastly, today's webinar is being recorded. A copy will be posted on the Benefits Open Enrollment website. At this time, I will turn it over to our presenter, Larry Daniels.
Well, good morning, everyone. It's Larry Daniels with Lincoln Financial here to go over the 2022 benefits overview for County of San Diego, specifically the short-term and long-term disability plan, and especially the new paid family leave program from Lincoln. Okay, and it's not paging down like it did in the practice session. There we go. Okay, well, Lincoln Financial has been around with County of San Diego for a while, so we should be familiar to you, but just a reminder, we're a very strong company, both strong financially and very highly rated. The benefits are provided at group rates. No money is due now, and your premium is paid through simple payroll deductions. All of that continues. So short-term disability, this is for employees who pay into the California SDI, the State Disability Insurance Plan. You have money coming out of your paychecks approximately at 1% after tax. That's why when you receive the money from state disability, you receive that tax-free. So the program highlights, obviously, it's weekly cash benefit during your recovery from injury, illness, surgery, childbirth. You have a certain number of days before benefits begin, and we'll cover that on a specific slide. And after that period, then the insurance pays a weekly cash benefit until you're able to return to work or the coverage periods ends. It also provides a partial cash payment. So it also provides for if you're able to work and see if you can do gainful employment again and receive a partial wage, you can also get a partial disability benefit, as long as it doesn't exceed 100% of what your pre-disability earnings were. So you have a family income benefit, a rehabilitation assistance benefit, to be able to see if you can do a rehabilitation program, a 5% program reimbursement for reasonable accommodation if you need something for access to be able to do your job. It is a portable plan, and you have an annual guarantee issue open enrollment, but that is subject to a pre-existing condition limitation of 3 months, and waiver of premium applies. We talked about group rates, often less expensive than rates for individual policies. That's absolutely true, and payroll deduction. So let's look at a few of the details. It's income replacement. So anytime you're talking about short-term or long-term disability, you're talking about paycheck protection, trying to protect what you make when you can't work, so you have something coming in that's approximately equal to what your net paycheck looked like when you were working. So benefit waiting period for this plan, for those of you that do pay into California State Disability, you have a 14-day elimination period. That's just a waiting period, a fancy word for waiting. Okay? 25% of earnings is the benefit. That doesn't sound like much, but that's paid in addition to what you get from California State Disability, which is between 60 and 70%. So it really gets you up into a level that's like 80 to 85% of your gross pay, which should be an amount relatively equal to what your paycheck looks like. And the maximum benefit is $1,000 a week. Maximum benefit duration is 24 weeks. Basically the 2 weeks elimination and the 24 weeks duration, that gets you to 26 weeks, which is 1/2 of a year. That's 6 months. The deductions are taken after tax, so that this benefit to you is also paid to you tax-free, just like the California State Disability is. So all of the income you receive that you get under this plan is non-taxable earnings. That's a really big deal. The pre-existing condition limitation we looked at, it's a 3-month look back from the effective date. So those of you that are already on the plan, you've already served that pre-existing condition limitation. But for those of you that might be signing up during this initial open enrollment period now, you're going to look back from January 1st of 2022, 3 months. So October 1st through December 31st is that 3-month look back period. If you've been treated or diagnosed for any specific condition, taken medication, received medical advice, that might be considered a pre-existing condition. Also, it would be for maternity-related leave. You can't already be pregnant when electing the plan. They would not be able to receive the disability benefits. It gives rates here, but this is going to be on your online enrollment platform. All of these rates are going to be personalized for you based upon your salary and based upon your age as appropriate. So this is just a slide that indicates it's based on per $10 of weekly benefit. So when you have the short-term disability plan, and this is for those of you again that are paying into California State Disability, you get the option of the short-term disability plan, and then you have a long-term disability plan to protect your income beyond the 24-week short-term disability duration. So long-term disability, obviously still injury, illness, or surgery. So a 180-day elimination, that is filled by your short-term disability plan, or it can also be covered by employer-sponsored sick leave, PTO, or things like that. After the 180 days, the insurance pays a monthly cash benefit until you're able to return to work or the coverage period ends. It's at group rates, less expensive than individual policies, and payroll deductions are very easy. Benefit features, portability again, reasonable accommodation, a 3-month survivor income. If death does occur, then survivors receive 3 times the monthly benefit amount as a one-time payment. So 180-day elimination, it pays 60% of your pre-disability earnings up to a maximum of $5,000 a month. Deductions are again taken after tax, because if they were taken pre-tax, it would be taxable income to you when you receive the disability benefit. Then instead of 60%, your net effective amount would be between maybe 45 and 50%, which is fairly low. So there's a really good reason to take these deductions after tax. That way you're paying tax on the premium and not on the benefit when you receive it. They have a 6-month look back period for that pre-existing condition on the long-term disability. Mental and nervous and substance abuse have a 24 months per occurrence limitation. Specified illnesses, there's no limit. And the definition of disabled is your own occupation for the first 2 years on the plan. So it's the inability to do what you normally do on a day-to-day basis. Beyond 2 years, it becomes, do you have the ability to do anything for which you have appropriate age, training, or experience? Portability is included, reasonable accommodation also. We talked about the survivor income benefit and the waiver of premium. Okay, now we're going to switch over for those employees that do not pay into California State Disability Insurance Plan. Okay, again, I'm going to reiterate that over and over again. Make sure you understand this is for those of you that don't pay into that plan. This also enables you to get a cash benefit during your recovery from injury, illness, surgery, or childbirth. Same process. The elimination period or the waiting period, you could be covered by employer-sponsored sick leave or paid time off. And then after the elimination period, the insurance pays a weekly cash benefit until you're able to return to work or the coverage periods end. And you'll have various choices in that regard. And also it does include a partial disability benefit. So part earnings and part disability, if you're able to see if you can sustain gainful employment and try to get back to work. Okay, the benefit features. So same features as the employees that have the SDI, this California plan. You have the family income, the rehabilitation assistance, 5% program reimbursement. The difference is you'll have a choice of whether you elect a 3-week, 7-week, or 12-week benefit period under the plan. Your choice. How long do you want to be covered under this plan? It would be portable, and there is an annual guarantee issue open enrollment. So you can enroll at any open enrollment. Nobody's going to say you can't have it, but at the point of a claim, they're going to see if there was some kind of a pre-existing condition that occurred during those 3 months before the effective date. Okay. Obviously, we say it's income, it's payment, paycheck protection for rent, mortgage, childcare, medical bills, car payments, all those things that it takes to live a normal life don't stop just because you're on disability. So you need money to be able to meet those obligations. Okay, again, I'll say this over and over again. This is for employees who do not pay into the CASDI program. So income replacement, the benefit waiting period is 7 days. Okay, 7-day elimination. 60% of earnings up to a $1,500 a week maximum. And the benefit duration you choose, either 3, 7, or 12. We talked about the post-tax or after-tax deduction being very important, and the disabilities having a 3-month look-back period. So employees wishing to use the benefit for maternity-related leave can't already be pregnant when electing the plan. And here's something we're going to be spending a lot of time on, and there may be a lot of questions on, because brand new for this year in 2022 is a paid family leave program that goes along with those folks who elect this short-term disability plan and you do not participate in the California SDI program. So it provides a cash benefit when you need to care for a seriously ill family member, bond with a new child, or a military exigency applies. There's the rate structure. Again, I'll reiterate to you, this is all going to be personalized for you based upon your age as appropriate and your income. But it's very, very cost effective. It's something that you want to give a serious look into. If you're not already participating in the plan, it's the only way to protect what you make if you're not able to work. Okay, so we're going to reiterate, it's for those. Paid family leave is for employees who do not pay into the California SDI program, and very important, and who elect the County of San Diego's short-term disability plan with either the durations of 3, 7, or 12 weeks. Okay? Employees who do pay into the SDI program from California or who participate in the long-term disability plan are not eligible for the PFL program. So paid family leave, so care for a seriously ill family member, bonding with a newly born minor child, adopted or foster child, or to attend a qualifying exigency, so like to cover active duty or a call to covered active duty of a covered family member. This is going to be very important also. The qualifying event, we're going to be talking about qualifying events, must occur on or after January 1st, 2022. That's a very important date to remember. And it's also important to note that the paid family leave is not a disability benefit. The disability is based on your inability to work. Paid family leave is for these other types of issues when you want to bond with a newborn child, care for an ill family member, and so forth. The covered family members over on the right side of your screen, you can see it's very flexible. So covered family members can be a child, parent, parent-in-law, grandparent, sibling, spouse, registered domestic partner. Okay. So employees may receive up to, but not exceeding 100% of their average weekly wage, using a combination of PFL benefits, any accrued leave, PTO, vacation, accrued sick leave, and so forth. Benefits begin the first day of leave, and the benefit duration is 8 weeks. Okay. Again, the qualifying event must be on or after January 1st, 2022, and the benefit duration of the paid family leave is 8 weeks. Doesn't have to be 8 weeks continuous. It can be intermittent, as little as a day at a time if necessary. The benefit calculation is going to mirror what the state of California does for those that are on the California SDI program. So there's a way to check what the calculation would be based upon your highest quarter of income. So the EDD does provide a sample calculator for employees to estimate benefit amounts. But basically, it's payable at 60 to 70% of the employee's average weekly earnings in the highest quarter of a base period. Okay. So we have an example here of highest quarterly earnings are $1,838. That's not very much. That's only about $600 a month. So the weekly benefit amount, $100. Highest quarterly earnings under example number 2, 30,000. So basically, that's someone who's really in six figures on an annual basis. Weekly benefit amount of $1,300. Remember, these weekly benefit amounts are paid tax-free to you. So it's an integrated short-term disability and leave process. Okay, so paid family leave, again, is for those employees who don't pay into CASDI and who elect the County of San Diego's short-term disability plan. You choose whether it's 3, 7, or 12 weeks. The integrated process, basically, if Joan here files a claim leave with the intake line, she is immediately assigned a case manager as a single point of contact. The leave packet is distributed. The case manager talks to the employee, develops a relationship throughout the whole process, and proactively reaches out to her doctor to use clinical resources and vocational specialists as appropriate. The case manager will update the claims system, produce automated reports to the HR portal, and update the employer of the employee's status. The assigned case manager checks in regularly, works with the department to coordinate the return to work plan and make sure that they confirm everything so that she has systems access and so forth in preparation for her return. So you have one single point of contact that manages the whole process. And again, the qualifying event has to occur on or after January 1st of 2022. So how does it work with maternity and bonding claims? So employees who do not pay into the SDI and who elect the short-term disability plan of 3, 7, or 12 weeks. So the claim specialist confirms whether the employee intends to use the bonding time. If yes, and the employee has the entitlement available under the paid family leave plan, the specialist will have the bonding claim created and approved. And then the intermittent bonding, it can be taken intermittently on a daily or weekly basis as needed. And the qualifying event, again, must occur after January 1st of 2022. So under the examples of maternity claims, here's how the benefit coordination, what it looks like. The elimination period through all examples is 1 week. And then if you're under the 3-week plan, you have 3 weeks of short-term disability payment. And then you have the 8 weeks after that of paid family leave. This shows a continuous red line, but obviously it can be taken intermittently, but it has to be taken within 12 months after the birth of the child. For a 7-week plan, you have an elimination period, and you also have the short-term disability plan, and it is 7 weeks. And now currently, the normal delivery is paid for 6 weeks. So it pays 7 weeks here in case it is cesarean section delivery. It will pay 1 additional week beyond the normal 6 weeks for a regular delivery. And then under the 12-week plan, covers an additional 2 weeks in the event of a C-section delivery. So it would be 6 weeks for normal delivery. It would pay an additional 2 weeks to get 8 weeks. Okay. And then you have the 8 weeks of the paid family leave regardless under either of the plans. Okay, so a non-maternity care of a family member under the paid family leave program. So you can use 8 weeks of PFL within 12 months for multiple qualifying events. You can take it as one continuous leave or intermittently in as little as 1-day increments. Again, you're going to get tired of hearing this, but the qualifying event must occur after January 1st of 2022. So let's look at bonding scenario 1. Person's currently pregnant, the baby is due in November of 2021. Am I eligible to use the PFL benefit? If so, when can I begin to use it? The answer is no. Regardless of your current enrollment, if you choose to elect the plan during this open enrollment, the PFL benefit is payable only for qualifying events that occur on or after January 1st of 2022. In this scenario, the actual delivery date is the qualifying event. Number 2, I'm currently enrolled in the VSTD plan. I'm pregnant and my baby is due January 2022. If my actual delivery date is January 1st, 2022, am I eligible to use the PFL benefit? If so, when can I begin to use it? Yes, this person is eligible. If you're currently enrolled, the PFL benefit is payable for qualifying events that occur on or after January 1st of 22. In this scenario, the actual delivery date is the qualifying event. Your PFL benefit may begin after your STD benefit ends. You may take your time in one continuous leave or intermittently in one-day increments within the first 12 months after your child's birth. Okay, now let's take a look at the person that's not currently enrolled in the VSTD plan, but perhaps they are wanting to do it during this open enrollment. And they're currently pregnant and the baby is due in January 22. The only difference in this scenario is they're not currently enrolled in the short-term disability plan. Am I eligible to use the PFL benefit? If so, when can I begin to use it? Yes, this person can use the PFL benefit. If you're not currently enrolled but choose to elect the plan during open enrollment, the PFL benefit is payable for that qualifying event on or after January 1st of 2022. The actual delivery date, again, is the qualifying event, and the PFL benefit may be taken as one continuous leave or intermittently, again, within the first 12 months. And the note is, remember, the STD benefit would not be payable due to the pre-existing condition exclusion, that 3-month look-back period before January 1st of 2022, because they were currently pregnant. In bonding scenario 3, how long is the PFL benefit? If I'm enrolled in the 3-week STD plan, is that PFL time in addition to my 3 weeks of STD? The PFL benefit is for up to 8 weeks. The PFL benefit will begin after any STD benefit ends. You may take the time in continuous leave or intermittently. Again, so the STD, it pays 3 weeks under the short-term disability plan, and then the paid family leave benefit begins right after that. My spouse is pregnant and due to give birth in January. If I enroll in STD during open enrollment, am I eligible to use PFL for the purpose of bonding time with my new baby? The answer is yes. There is no waiting period for PFL. The PFL benefit is payable for qualifying events that occur on or after January 1st of 2022. And again, in this scenario, the delivery date is the qualifying event. You may take your time in one continuous leave or intermittently. If I enroll in STD during open enrollment, am I eligible to use PFL for the purpose of bonding time with my new minor foster child in January? Yes, if the new child is placed with you on or after January 1st, 2022. There's no waiting period for the PFL, as we discussed, and the PFL benefit is payable for qualifying events that occur on or after January 1st of 2022. In this scenario, the actual placement date of the foster child is the qualifying event. And again, you can take as one continuous leave or intermittently. Okay, how does it relate to caregiving? Again, we also talk about qualifying events when it comes to the caregiving. If my parent has a surgery scheduled for December 1st of 2021, and I will be out from work taking care of them for approximately 8 weeks, am I eligible for the PFL benefit? If so, when can I begin to use it? No. Whether or not you are currently enrolled, if you choose to elect the plan during open enrollment, the PFL benefit is only payable for qualifying events that occur on or after January 1st of 2022. In this scenario, the surgery date is the qualifying event. I think you're beginning to see a pattern here. My brother is planning to begin chemotherapy in January 2022 and anticipates needing help. Would the PFL benefit cover this? Yes, of course. The PFL benefit is payable for qualifying events that occur after January 1st. In this scenario, the treatment begin date is the qualifying event. A serious health condition is an illness, injury, impairment, or physical or mental condition of a patient that requires at-home care, inpatient care in a hospital, hospice, residential medical care facility, or continuing treatment by a physician or healthcare practitioner. My child is scheduled for surgery in January 2022, and I will need 4 weeks to care for her. Would the PFL benefit cover this and still allow me to use the remaining 4 weeks later in the year? Yes. PFL benefit is payable for qualifying events that occur after January 1st. And in this case, the surgery date is the qualifying event. And you can use up to 8 weeks of PFL within 12 months for multiple qualifying events. Okay. And we'll see, I guess there are some questions. And do we want to, Marianne, are you going to read them for me, or do you want me to?
Sure, Larry. Thank you. We did have some questions that came in earlier throughout the presentation. They are not directly related to the PFL benefit, so I'll go ahead and ask these. The first question is asking, is short-term insurance necessary when you retire and are no longer working?
I would say if you're actually retiring, no, it's not. It's meant to cover your replace income while you're working.
Thank you. The next question is, it's a two-part question. It's asking, do all classifications qualify for these benefits, or how do I know if I'm paying into SDI?
Well, I would check in to be sure, probably want to check with HR, but normally you will have a payroll deduction that will have something like CASDI. I know when I have payroll stubs, when I pay into that, it says something to that order. It should be an amount that's roughly equivalent to 1% of your salary. But I know there is a listing of job classifications that do not pay into CASDI that the county produces. So I think to be absolutely sure, I would check with Human Resources on that.
Thank you. The next question came in pretty early in the presentation, and it's asking about the 5% rehab assistance benefit. Can you provide any insight on that, Larry? Or is that
Sure.
Something you need me to answer?
Sure. The rehabilitation, and you can correct me if I'm wrong, but if there is usually they will call it a mandatory rehabilitation process. If it looks like there's something that the employee would be able to do to get to be rehabilitated, perhaps even to a different job title, but that would get them gainfully back into the workforce, then Lincoln Financial will add 5% to their disability benefit if they agree to an appropriate, that's a really key word, to an appropriate rehabilitation plan for that employee.
Thank you, Larry. I will add to that, not only does the plan need to, or the rehab plan need to be appropriate, but it also needs to be approved. Yes. So it's one that the case manager would need to agree to, as well as being an appropriate program.
Yeah, and again, that's based upon training, education, experience, age. There's a lot of things that go into developing that kind of a program, and it has to be mutually agreed upon.
Thank you. I see no further. Sorry, there are a few more questions. Just a moment. Is there a difference between short-term disability and short-term is there a difference between short-term disability insurance and short-term insurance, and long-term disability and long-term insurance?
Well, I think in terms of short-term disability insurance and short-term insurance, they're really talking about the same thing. That I think somebody's talking about short-term insurance. It really is short-term disability insurance. In terms of long-term disability insurance and long-term insurance, sometimes people get confused between long-term disability insurance and long-term care insurance, which of course is coverage for when a person might be in a nursing facility or needing care at home. That's a whole different type of insurance. But I think some people just get confused and start calling long-term disability insurance long-term insurance. And that's about the only thing I can comment on that. Without knowing the context of how that was asked, I would just say they're talking about the same thing unless somebody has in their mind long-term care insurance, which is totally different.
Thank you. Larry, can you, the next question is, what does maximum benefit duration period refer to?
The maximum time that the benefit is payable. So for example, under those that are qualified for the California SDI plan, it's a 24-week benefit period. So that means that that benefit period runs out. So when you serve your first 2 weeks as the waiting period, then you're paid for 24 weeks after that. That would be the maximum duration that that benefit would be paid for those first 6 months. In terms of long-term disability, it's basically it's Social Security normal retirement age. That would be the maximum benefit duration period, would be your Social Security normal retirement age, which we refer to as SSNRA.
Thank
In the
you.
case of those that are on the 3, 7, or 12-week plans, it refers to that's the maximum benefit duration period, depending on the plan you choose. It could either be that 3 weeks of benefit payments, 7 weeks of benefit payments, or 12 weeks of benefit payments. That's the maximum benefit duration.
The next question, do you have to reside in the same house or home of the relative, such as a parent or sibling?
I would say no. I don't see how that would be an issue. You know, if you need to take care of somebody, it could be that you need to take care of them where they are. I don't think there's any requirement to reside in the same household.
Great. The next question. You mentioned a brother in one of the PFL scenarios. Can you tell us again, who are those that we can care for under PFL?
Well, without going back to that slide, I know that it is spouse, child, parent, parent-in-law, and one of those was siblings. So siblings are brothers and sisters. It also could be, you know, actually I don't have the slide in front of me right now, but there's, it's very flexible. And yes. I think it also can be a registered domestic partner, as I recall.
Yeah, I show it's child, parent, parent-in-law, grandparent, sibling, spouse, or registered domestic partner.
Right.
I can cheat because I can look back at the slide.
Very good. I haven't exited mine yet. I'm looking at the questions.
Sure. The next question, is maternity leave a qualifying usage of long-term insurance, or can I only use short-term insurance?
The maternity leave is generally based upon normal delivery. Regular delivery is a 6 weeks benefit plan. So depending upon the plan you choose under that, 3, 7, or 12 weeks, it's still just 6 weeks of benefit period. The only thing that I can think of is it could be extended beyond that. Obviously, in the case of a C-section, in a 7-week plan, you can get an extra week to pay for 7 weeks. Under the 12-week plan, you can get an extra 2 weeks so that it would pay for 8 weeks total. If there were major complications, which would require doctor's authorization somehow, like if based upon the delivery, you needed total bed rest, at some point, there could be a different start date, and the benefit could conceivably go out to the full 7 or 12 weeks under the plan, or even under the CASDI plan. It could go conceivably beyond normal 6 weeks, but that's a medical issue where a doctor is saying you need more, either something happening pre-delivery where you need total bed rest, or something post-delivery where there are complications where it's not just bonding time, it's like you're still basically disabled and you need like total bed rest or something like that, where there's been a complication. But that's going to have to be under a doctor's authorization. But normally long-term disability, since long-term disabilities normally don't start until after 6 months, it really wouldn't normally be a feature of a maternity claim that would ever last that long.
Thank you. The next question, how does STD interact with regular sick leave? Can it be used after or in addition to regular sick leave during post-birth disability period?
I think I'd have to refer you to your HR, whether they would want you to use your sick leave or PTO first. I'm really not aware of if there's any, regulations or requirements under the county's plan.
Yeah, I'll jump in on this one as well,
Good.
because there is the ability to use sick leave during this time. However, your benefit combined with that leave or that leave pay cannot exceed 100% of your current salary. So there is a limit to how much can be used while out on a disability. The next question, Larry, can you clarify the use of short-term insurance with SDI and PFL? I missed the beginning of the presentation, specifically as it relates to pregnancy and maternity leave.
Well, we went through a lot of examples. So basically it's for those that do not pay into the California short-term disability insurance program. And then you elect a short-term disability plan of either 3, 7, or 12 weeks. Along with that comes the ability to use the paid family leave program, which is brand new beginning January 1st of 2022. So it's not really SDI, it's a short-term disability program. Now, the state of California, to clarify, the state of California, so if you're paying into CASDI, the state of California has a paid family leave program already in place. So what we're trying to do for those that don't pay into the CASDI program is to have a plan that will duplicate the features of the paid family leave program for those folks. So it gives you that 8 weeks beyond the disability. It gives you the ability to use paid family leaves for up to 8 weeks intermittently or as a continuous block of time.
Thank you. And I'll also add to that, we will be presenting the slides again after we are done with this session. So we do have a full 2 hours for our Lincoln presentation. And once the questions kind of quiet down for this session, we will be presenting once again our slides from the beginning. So if that's something you would like to stay on to watch again, you are welcome to do that. The next question.
In the same idea. I'm looking at that. Go ahead and repeat that, Marianne, so they know.
I'm sorry, Larry, do you want to go on to the next question?
So I cannot receive benefits for PFL if I pay for SDI, but I can still receive STD or LTD. No, you do have a paid family leave program. When you pay into state disability insurance for California, along with that comes a paid family leave program. It's already in place. So you can receive the short-term disability plan that's paying you in addition to what the state pays you. And then you also have the long-term disability plan that continues way out into the future, your normal retirement age, potentially. Okay, because remember, state disability insurance ends after 1 year. So you have 25%. When you pay into SDI, you get 60 to 70% of your pay tax-free. When you opt into the voluntary short-term disability plan, that pays you an additional 25% tax-free in addition to the state for up to the first 6 months. After 6 months, month 7 through month 12, you're going to have some coordination between the long-term disability plan that you voluntarily choose and state. The big advantage is what happens after 1 year when state disability goes away. Then you have the long-term disability plan from Lincoln Financial that will pay you out years into the future, potentially, if you're catastrophically unable to go back to work.
Thank you. The next question. I am paying into California SDI. Is it the same thing as short-term disability? Is it the same thing as short-term disability offered?
No, they're different. So you're paying into CASDI, and again, you receive a 60 to 70% return of benefit tax-free based upon what your salary is. And then the short-term disability plan that's offered through Lincoln Financial would pay you an additional 25% in addition to that state payment that pays you that tax-free to get you to a level that's really closer to 85% of your gross pre-disability earnings. The idea is that that gets you to a level that is approximately equal to your net paycheck, so you can continue to pay your bills. So SDI pays you a payment, and the short-term disability plan pays you an additional amount of money, and both of those are tax-free.
Thank you. Are these benefits eligible for both the employee and the employee's spouse if additional paid? If so, do both receive PFL benefits separately?
Well, if an employee of the county and a spouse who's not an employee of the county, then the spouse is not eligible. This is only for the short-term disability plan is only for the employee who's unable to work due to some disability. If the employee spouse also happens to be a county employee, then yes, there are two separate sets of disability payable, and there are two separate sets of paid financial leave. I don't expect that's probably a common situation, but if you're just talking about an employee with a non-county spouse, then the disability is only for the employee, and you have one set of PFL benefits.
Thank you. The next question, what if I'm no longer employed by the county? What would be the difference of cost?
I'm going to have to defer to you on Mary Ann. I'm not familiar with the contract on that. If it's
Yeah.
going to be the same rates or if it's going to be a different risk.
It would be a different rate. So although the disability plans are portable, so in the event that you're separated from employment with the county, you can port your disability coverage to a group plan. However, there may be different rates in place, and that's something that we will probably need to get back and provide through our contacts here at the county. Typically, those rates are determined based on a person's age and, such questions as that. So it may be that those rates are quoted upon request in the event that an employee is separated from the county. So that's not something we can necessarily provide upfront, but is something that can be quoted upon request.
Generally, that's what's called a pooled risk program, and the group becomes all of those folks that have ported the plan, and so that's a different risk group.
The next question, can you provide the phone number for specific questions? So I'm going to go ahead and take this question, Larry.
Sure.
There is a dedicated phone line that will be available to employees to ask their specific questions. That phone line will be available starting next week. So we're not giving out that phone number quite yet, but your benefits team with the county will be sharing that phone number beginning next week, where any specific questions can be relayed to. There will also be an email address that will be provided for those specific questions as well. The next question, can you stack SDI, STD, sick leave, and vacation to maximize maternity leave timeliness?
Timelines, yeah, that kind of harkens back to what the rules are for the county of what has to be used when. I think I'll defer to you on that, Mary Ann, again.
Yeah, thank you. So just to clarify again, at no point can your benefit payment along with any accrued sick leave or anything like that exceed 100%. If you are receiving SDI benefits and STD benefits, those can be stacked on top of one another. However, if you are also receiving your sick leave or anything like that, that cannot exceed 100% of your regular pay. So you will never be able to get more than 100% of your pre-disability income. So the next question, for a person who is 72 and still working, are they disqualified from the long-term disability benefit? Larry, are you there? I think you may be on mute.
I did. Yeah, I had a phone ringing. Sorry, I thought put it on mute. So I think there is a rate structure for 65 plus on the long-term disability plan, but I'm not sure. Let's see. Yeah, it has 65 plus. That's 3.7. Do you know that offhand, Marianne?
Yeah, this is one I'm happy to take. So this is such a great question. In the event that someone is still working above the age of the normal Social Security normal retirement age, there is still a maximum duration when how long your benefits will be paid. So you're not excluded from being eligible for this benefit. However, your maximum period of time that you will receive the benefit is 12 months for LTD. So for anyone age 69 or over at the age of their disability and they're unable to work, the maximum benefit period is then 12 months.
And this is established under the Age Discrimination in Employment Act that happened a long time ago. There's a declining number of months payable after age 65 and even after your Social Security normal retirement age, but they have to pay you for at least a year. Even if you're in your 70s.
So that looks like the last of our questions so far, Larry. I think we could just give it a few more minutes to see if any other additional questions come in.
Okay.
There's been some great questions from this group.
Yeah.
If there was anyone who asked a question earlier, if there for any reason we didn't answer it to your satisfaction or maybe didn't understand your question accurately, please feel free to resend your question via the chat.
Or Q&A. Like you might have had one more, maybe.
Oh, so what are the procedures to submit a claim?
Marianne, can you take that?
I would love to take this. So we are actually going to be, again, releasing an updated claim instruction flyer. This is one that's already made available on your intranet site, on your microsite for your disability benefits. However, it's just a simple telephone call away to submit your claim. And that's whether it's a STD claim or a standalone paid family leave claim, or if it's maternity related and you plan on doing an STD claim and bonding claim, or bonding leave, I should say. All those can be submitted by calling Lincoln and just getting that claim set up. And it's a one call for everything. So once you have your case manager assigned, they'll be your direct contact for any questions, whether it's regarding your claim and or a leave. And it's a simple, like I said, a simple phone call away. That phone number will be changing next week. So you'll see an updated flyer, but with that number, but it's the same simple procedures as it is today. Just a simple phone call to Lincoln. They'll get some questions answered from you about your leave and your absence. If you're, for example, having a scheduled surgery, they'll ask you for kind of the dates of that, your expected last day of work, and work with you to help get that claim initiated and started. And same thing for a paid family leave. So if it's a standalone paid family leave and you're going to be out for, say, us to help care for a family member who is recovering from a surgery, you would call that same number and get that leave set up with Lincoln. So we're keeping it as simple as possible for you. And I'm not seeing any more questions coming in. Maybe we can give it just a few more minutes. And Larry, I'm going to recommend that we begin the presentation again at the top of the hour. So if anybody who maybe missed the beginning of the presentation wants to watch that again, we will start that again at 11 a.m. Pacific time.
It's important to know too, if somebody missed the very beginning, this presentation is recorded and a recording will be available after the end of the presentation. Sometimes it takes a while to compile that, so it might not be immediately available, but I would imagine at some point during the day today and ongoing, it will be available.
Great reminder. Thanks, Larry. Larry, another question has come in. Ooh, we've got two new questions that have come in. So the first question is asking, what is a family income benefit?
What's an additional amount that's paid into the family in case of the disability? And Marianne, I'm not sure of the percentage involved in that. Could you help me out with that one?
Yeah, let me see. The family income benefit actually, let me see. Good golly. Sorry, I don't have this right off the top. Oh, here we go. So it's actually a lump sum that's paid in the event that if a claimant passes away while out on disability. So in the event that a person is on an active LTD disability and they are receiving a monthly benefit, family income benefit is paid to the survivors of that eligible employee, or I'm sorry, of that disabled employee. That is equal to 3 times the last monthly benefit. So that would be paid to a surviving spouse, if there is one, or a surviving child if under the age of 25. And that amount is just, again, 3 times the monthly benefit of what the person was receiving while on long-term disability. And the next question, how does this plan work as a portable plan if you are no longer working or retired?
Well, if you're no longer working or retired, then it really, again, we talked about a quote, that we give you a quote based upon your age at the time. You could decide if you wanted that, but it would be a different group. It would be a group of those people that had ported the plan, which is a little bit different risk factor. So the rates would not be the same, but you would be able to do that. If you're retired, it really wouldn't be effective. If you're no longer working, it would act as a transition until you were able to fall under a new employer's disability plan. You want to add anything to that, Marianne?
Yeah, so the one caveat, the one thing I would add is that upon retirement, the portability option is not available. So as you mentioned earlier, this plan would not really be necessary for someone who's retired. And so the portability option is for when employment is separated, but not when it's due to not when it's due to retirement. So that's a little bit different than no longer working. So if it's a formal retirement, the benefit would not necessarily be portable.
Thanks, Marianne.
You bet. So I think we've got about 1 more minute and then we could start at the beginning of the presentation and I will go on mute for a while.
Well, I think we are at 11 o'clock. I'm going to go ahead and do the presentation again. We did one at 10 o'clock. We had some wonderful questions. Going to go through the presentation again. This is the 2022 benefits overview for the County of San Diego. And from Lincoln Financial Group, my name is Larry Daniels, and I'm a benefit counselor. And I'll be working with Mary Ann Young, also with Lincoln Financial Group. And we'll answer with the Q&A block. If you have questions, we'll be answering those at the end. This presentation is recorded. It will be available after the presentation today. Sometimes it takes a while to compile the actual recording, so it may be a couple hours later, but your Human Resources Department will make sure that's posted. So if you need to review the presentation again, you'll be able to do that. So everybody is muted, but then again, we will encourage asking questions at the end, and we will do our best to give you an answer live. If there's anything that stumps us for some reason, then we'll be sure to get back to you and have that come back through Human Resources to be able to answer individual questions, especially those that may be of a personal nature that we don't want to broadcast out to everybody. Excuse me. Okay, so Lincoln Financial should be familiar to most of you. We've been here for a while now. So it is a highly rated company, very financially strong. People really matter to Lincoln Financial. So you can count on excellent customer service from us. We do provide benefits at group rates. No money is due now. And of course, your premium is paid through payroll deduction. Let's see here. There we go. Short-term disability. So this is we're going to make this distinction between employees who pay into the California State Disability Insurance Program and those who do not. Two different sets of benefits. They should be familiar to you, but to the extent they're not, we're going to draw this distinction, and we're going to be doing a lot of repetition to try to drive home the differences. We're going to be spending a lot of time today too on the new paid family leave program for those employees who do not pay into the California SDI program. In terms of who is eligible for SDI from California and who is not, there's a listing that is produced by the County of San Diego for different classifications. You have different codes of classifications. If you're unsure about whether you do qualify for the California SDI or you don't, then you really need to go back through your Human Resources Department to get the right answer. So short-term disability for those who do pay into California State Disability. Obviously, these payments are for injury, illness, surgery, childbirth. You have a certain number of days before benefits begin. That's a fancy word called elimination period, but it is a waiting period. That's the simple way. So you could be covered by employer-sponsored sick leave or paid time off during that time. But after the elimination period, then you do have a benefit period that's payable, and we'll cover that in detail in a further slide. And the coverage can be a partial cash payment if you can only do part of your job or work part-time, like if you're on limited duty or you have limited hours because of your disability. It enables you not only, you don't have to be totally disabled, you can get a partial paycheck and a partial disability payment as long as it doesn't exceed 100% of your pre-disability earnings. So you have a family income benefit, basically money that's paid to your family in case you were to pass away during that period of disability. You have rehabilitation assistance. You have a 5% program reimbursement for reasonable accommodation. Rehabilitation assistance is an additional percentage that's paid onto your disability benefit if you agree to a program of rehabilitation that is appropriate and approved. Okay. Reasonable accommodation means if there's something that has to be built into your, an example might be a wheelchair ramp, or it might be some kind of a special accommodation, they will pay an additional 5%. 24 weeks is the maximum benefit depending on your eligibility. You have a 2-week waiting period, then 24 weeks of payment. You have a portability provision built into that, so you can take it with you if you leave employment. But if you're retiring, that would not be effective. You have an annual guarantee open enrollment, so you can apply for this at any open enrollment. The only caveat to that is that there is a pre-existing condition limitation, which is a 3-month look back period, and we'll talk about that on a future slide also. So they're going to be looking back 3 months before the effective date. And remember, the effective date now is January 1st of 2022. That's going to be the main date we're talking about. I mean, we're way ahead of the curve right here in September, but we're talking about January 1st of 2022 when all of these things are effective. And has waiver of premium. That's basically if you become disabled before age 60, you don't have to pay premium up through the age of 65. Obviously, group rates, payroll deduction, and we have a great claims process where you have a single point of contact that will handle your claim all the way through. Obviously, it's important to keep up with bills. Even if you're on disability, the bills don't stop. You still have to buy groceries, make car payments, credit card payments, pay utilities, all those things keep on going even though you're disabled. So having a disability plan is really, really important. So income replacement. So you have state disability. State disability is going to pay you 60 to 70% of your gross pay on a tax-free basis. That's based upon a calculation that the state does. Those of you who are on paying into the state plan know that it's about a 1% deduction out of payroll that comes out, and then that qualifies you for a benefit amount based upon your highest quarter of earnings in a base period. It's all based on a calculation. This plan will pay you 25% of your gross pay, up to $1,000 a week, in addition to what you get from California State Disability. So it basically gets you to a level that's well into the 80 to 85% range. That would be all tax-free. So tax-free state disability, 60 to 70%, another 25% from the Lincoln Financial Plan. And that basically is a way to protect what your net paycheck looks like when you can't work. So you have a 2-week waiting period, then you have 24 weeks of benefit, what's called the maximum benefit duration period. The premium deductions are taken after tax, as we discussed, because that's what makes the benefit tax-free. The IRS says you either have to pay taxes on the premium or you have to pay taxes on the benefit. So if those deductions were to be taken out pre-tax, then the benefit would be taxable, and that diminishes the amount of actual net income that you would receive. So important that it's an after-tax or what we call a post-tax deduction. And the pre-existing condition we talked about, you have a 3-month look-back period. So basically October 1st through December 31st of 2021 is the look-back period. Anybody who has a condition for which they've received medical advice, taken medication, received treatment, then that could be considered a pre-existing condition. So for example, an employee wishing to use the benefit for maternity-related leave could not also be pregnant when electing the plan. Okay, so again, we're talking about employees who pay into the California State Disability Insurance Plan. This does give a rate breakdown based upon the 24-week duration, but on your online enrollment system, all of those rates will be personalized for you based upon your age and your salary. So it will give you a personalized quote when you go and into your enrollment system. So what happens after short-term disability? So you have the 2-week wait plus 24 weeks of payment. That's 26 weeks or 6 months. What happens after that? Well, your state disability insurance payment continues for up to a year. So state disability lasts for a year. So for month 7 to month 12, you're still going to have some state disability, but you won't have that additional 25%. You would have, if you elected, a long-term disability plan. And you can let that can dovetail with your short-term disability plan when it ends and keep your disability payments going. There would have to be some coordination with state disability during that time. So the long-term plan has a 6-month waiting period filled by your short-term coverage, sick leave, or your PTO, for example. Well, again, it's for injury, illness, and surgery. And then after the 100-day elimination period, your insurance is going to pay a monthly cash benefit until the coverage period ends, which would be your Social Security normal retirement age. Okay, group rates, payroll deduction, it's portable, features the reasonable accommodation just like the short-term does. It does have a 3-month survivor income benefit, so 3 times the monthly benefit would be paid to a survivor if death occurred during the disability period. And it also includes that waiver of premium. So it pays 60% of your pre-disability earnings. Remember, that's going to be tax-free though, because the premiums are taken post-tax. The monthly maximum is $5,000 a month, and the maximum benefit duration period for later of age 65 or SSNRA. We really don't talk too much about age 65 because Social Security normal retirement age now is 67 for almost everybody. I'm an old man, and it was 66 for me. So everybody's pretty much age 67. Now, that doesn't mean the benefits stop at age 67. There is an Age Discrimination and Employment Act, which has been in effect for a very long time. That means even if you're above age 67, all the way even to 70 and above, there's a declining period of benefit payment. But even at the most extreme, even if you're in your 70s and still working, then it's got to pay you for at least 1 year, at least 12 months. Deductions are taken after tax. We talked about the importance of that because if you took these premiums out pre-tax, then your disability payments would be taxable. That would mean that your net, instead of 60% of earnings, you may be reduced down to like a 45 to 50% income replacement, which is really not sustainable. So we want that to be 60%. So it's important that you're paying taxes on the premium rather than the benefit. These pre-existing conditions have a 6-month look back, so 6 months before the effective date. So you're basically looking at July 1st through December 31st, 2021, if you're signing up for the first time. Mental, nervous, and substance abuse conditions have a 24-month limit per occurrence. For specified illnesses, just general pain that's kind of hard to pinpoint, there's no limit on that. And the definition of disability, at least for total disability, is your inability to do your own occupation or your usual job for the first 2 years on the plan. Beyond 2 years, it is your inability to do anything for which you have age training and experience. So it really becomes a very, very complex agreement between counselors and various workers to determine what else you might be able to do, but it has to be consistent with your age, training, and previous experience. Portability is included, the ability to take it with you if you leave, except if you're actually going to retire. Reasonable accommodation, survivor income benefit, and waiver of premium, as we discussed before, is also included in the plan. And again, this is all for those who are under the California SDI plan. Now we're going to pivot to those employees that do not contribute into the California SDI plan, that are not eligible for that. So what do we provide for those folks? Okay, so again, you have an elimination period. After the elimination, you have a benefit duration period, which we'll talk about. And this plan also has a partial disability benefit. If you're on limited duty or working limited hours, you can get a partial paycheck and a partial disability benefit as long as it doesn't exceed 100% of your pre-disability earnings. Okay, so you're going to see this over and over again. This is for people that do not pay into the CASDI plan. You have the family income benefit, just like the other plan, the rehabilitation, the 5% addition for reasonable accommodation, the program reimbursement. The choice in this case, you have a choice of applying for a 3, 7, or 12-week benefit period. Choice is up to you, depending on your own individual situation. It does have a portability feature, and you do have that annual guarantee issue open enrollment, again, subject to that pre-existing condition limitation of a 3-month look-back period. Okay, and waiver of premium. In the 3-month look-back period, it's actually a 312. So the 3 refers to the look back. The 12-month is what's called an exclusion period. So if there is a pre-existing condition limitation, it's excluded for the first 12 months on the plan. But they're not going to tell you that you can't enroll for it. So something that would last beyond, if you're excluded for the first 12 months, after 12 months, then everything is covered in full. Those of you on the plan currently have already served that pre-existing condition limitation. This would only be if you're signing up during this open enrollment with a pre-existing condition, it could affect the benefit. So income with non-work related illness or injury, the short-term disability guards you against financial loss. The waiting period is 7 days for this plan. It's 60% of your earnings, again, tax-free because deductions are taken after tax, up to a maximum of $1,500 a week. And again, your choice of 3, 7, or a 12-week maximum benefit duration period. Pre-existing, we talked about that extensively. We have a 3-month look back. So those employees may be looking to enroll at this open enrollment and are currently pregnant, would not be eligible for the short-term disability portion because they would be pregnant before the January 2nd effective date. New in 2022, we'll be covering this extensively because it's a brand new plan, paid family leave, PFL. So we'll be talking about PFL. I won't necessarily say paid family leave every time. Provides a cash benefit when you need to care for a seriously ill family member. We'll talk about who those are. Bond with a new child, or if a military exigency applies. Somebody gets called up to active duty, you get called to active duty, or perhaps a family member gets called to active duty, like a spouse. Again, there are rates based upon age, but everything is, again, for this plan, it's going to be personalized for you when you go into your online enrollment system. Okay, we're reiterating again that paid family leave is for employees who do not pay into CASDI and who elect the County of San Diego short-term disability plans with maximum durations of 3, 7, or 12 weeks. Remember that those people that do pay into CASDI, part of the California plan is they already have a paid family leave system in place. So this is trying to duplicate that plan for those folks that do not qualify for the California SDI program. Okay. So employees who pay into CASDI or who participate in the long-term disability plan are not eligible for the PFL because they already have a PFL plan through the state. Okay, so who is it for? It's to care for a seriously ill family member, bonding with a newly born minor child, which could be adopted or a foster child, to attend a qualifying exigency, military assistance, covered active duty, or a call to covered active duty for a covered family member. And we're going to be talking about this qualifying event. We're going to be talking about that over and over again. January 1st of 2022 is this key date for qualifying events to occur. And we're drawing an important distinction that paid family leave is not a disability benefit. The disability benefit is for those of you that are not able to work because of a disability. The paid family leave is different. Okay. Covered family members, very, very flexible. So you've got child, parent, parent-in-law, grandparent, sibling, in other words, brother, sister, spouse, registered domestic partner. Okay. For military exigency, it could be spouse, registered domestic partner, parent, or child. So benefits begin the first day of leave. Okay. And the benefits can be up to, but not exceeding 100% of average weekly wage when receiving a combination of paid family leave and accrued leave benefits such as PTO, vacation, and accrued sick leave. So benefit duration is 8 weeks. And we're going to be talking about this over and over again also, just to hammer it home. The leave doesn't have to be continuous in one block. It can be in one block, it can be 2 weeks here, 2 weeks there, or it can also be a day at a time. It can be intermittent. So the benefit, we give 2 examples here, a very low wage earner, $18.3825, about $600 a month, weekly benefit amount of $100. Higher example number 2, $30,000 quarterly. We're talking about 6-figure income on an annual basis. That weekly benefit amount is $1,300. So the maximum is $1,357, the minimum is $50. This is going to mirror the state calculation. State of California looks at a base period. Usually they exclude the calendar quarter in which you file a claim and maybe even the previous quarter. And then they go back in the year before that and they look at your highest calendar quarter of earnings. Lincoln Financial is going to be doing exactly the same thing to mirror the state calculation. Now, EDD does provide a sample calculator for you to estimate your benefit amounts, but this will all be done in accordance with the state example. We're going to be mirroring that calculation. So what does the process, the STD and leave process look like? So basically you're going to file a claim and there will be a toll-free number posted that you can call into. We're not posting that yet, but it will be available during open enrollment and later. A person files a claim via the county's intake line. Lincoln will assign a single point of contact case manager that will distribute the leave packet. They will reach out to the physician proactively and be able to use clinical resources and vocational specialists as necessary, maintain contact with the employee all during the case process, updating the claim system, posting automated reports to the HR portal. And then the case manager will also check in with the doctor's appointments and work with the employee to coordinate a return to work plan and make sure and coordinate that to make sure that systems access and everything is available for the employee upon their return to work. So one single point of contact. Try to make it very easy for you. So maternity and bonding claims. So paid family leave. This is again for employees who do not pay into the CASDI and who elect one of those plans, 3, 7, or 12 weeks. Okay. The claims specialist will confirm whether the employee actually intends to use the bonding time. If the answer is yes, and the employee has the PFL entitlement available, then the specialist will have the bonding claim created and approved. And again, the PFL can be taken intermittently on a daily or weekly basis as needed, but the qualifying event must occur on or after January 1st, 2022. So here's some examples of how the benefit coordination works. You have your common elimination period of 1 week, 7 days. And then depending on the plan you choose, you have either a 3, 7, or 12-week maximum benefit period. But in the case of a maternity claim for the 3-week plan, it pays for 3 weeks. And then you have paid family leave that's available for 8 weeks after that. On the 7-week plan, standard payment for a regular delivery is 6 weeks. So in the 7-week plan, they will provide 1 additional week if it is a C-section delivery for a total of 7 weeks. And then the paid family leave can continue for 8 weeks after that. For the 12-week plan, again, a normal payment of 6 weeks for regular delivery, but it will provide an additional 2 weeks to bring that up to an 8-week payment if the delivery is by cesarean section. And then the 8 weeks of PFL continues after that. Okay, so income replacement. So you can use up to 8 weeks of PFL within 12 months for multiple qualifying events. We've talked about taking it as one continuous leave or intermittently in as little as 1-day increments. However, the qualifying event must occur on or after January 1st of 2022. So let's look at some bonding scenarios. So number 1, person's currently pregnant, baby is due in November of 2021. Am I eligible to use the PFL benefit? If so, when can I begin to use it? Remember, the qualifying event has to be after January 1st of 2022. So you can imagine that the answer to this is no. Regardless of your current enrollment, whether you're already enrolled in the short-term disability plan of 3, 7, or 12 weeks, if you choose to elect the plan during open enrollment, the PFL benefit is payable only for qualifying events that occur on or after January 1st, 2022. So in the case where a person is electing the short-term disability plan during this open enrollment, the answer is no, because the delivery date is the qualifying event. Now, what if they are currently enrolled in the short-term disability plan, either 3, 7, or 12 weeks, and the baby's due in January, and the actual delivery date is January 1st, then yes, They're eligible to use the paid family leave benefit. Because the paid family leave benefit may begin after your STD benefit ends. And again, you can take the time intermittently or as one continuous block within 12 months after the child's birth. So the person not currently enrolled for VSTD, pregnant, and the baby is due in January. If my actual delivery date is January 1st, am I eligible to use the PFL benefit? Yes, they are. Okay. Not currently enrolled, but choose to elect the plan during open enrollment, the PFL is still available because the qualifying event is on or after January 1st of 2022. And the delivery date is the qualifying event. But the STD benefit would not be payable due to the pre-existing condition exclusion because they're doing it during open enrollment, which is during that 3 months before the effective date that constitutes that look-back period. Bonding scenario 3. So how long is the PFL benefit? You probably know by now. If I am enrolled in the 3-week STD plan, is that PFL time in addition to my 3 weeks of STD? Yes. PFL benefits are for up to 8 weeks. They begin after your STD benefit ends. And again, you can take the leave intermittently or as a block of time within the first 12 months after the child's birth. In this case, the spouse is pregnant due to give birth. If I enroll in STD during open enrollment, am I eligible to use PFL for the purpose of bonding time with my new baby? Yes. So in this case, the spouse pregnant, but the partner wants to bond with the child. Yes, they're able to do that. There is no waiting period for the PFL. It's payable for qualifying events that occur on or after January 1st. So take the time again, intermittently or continuous in the first 12 months after the child's birth. Number 5, if I enroll in STD during open enrollment, am I eligible to use PFL for the purpose of bonding time with my new minor foster child in January? The answer again is yes. If the new child is placed with you on or after January 1st of 2022, the qualifying event in this place is the actual placement date of the foster child. So that determines, so if it's January 1st or later, then the answer is yes, you can use the PFL. If my parent has a surgery scheduled for December 1st, 2021, you see where we're heading with this, and I will be out from work taking care of them for approximately 8 weeks, am I eligible for the PFL benefit? If so, when can I begin to use it? You can imagine that the answer is no, because that's before January 1st of 2022. Those qualifying events have to take place January 1st or later. The surgery date in this case is the qualifying event, and it's before the January 1st date. But how about the brother planning to begin chemotherapy in January 22 and anticipates needing help? Would the PFL benefit cover this? Yes, of course, because the qualifying event occurs after January 1st of 2022. The treatment date, treatment begin date is the qualifying event. And so what is a serious health condition? Is an illness, injury, impairment, or physical or mental condition of a patient that requires at-home care or inpatient care in a hospital, hospice, or residential medical care facility, or continuing treatment by a physician or healthcare practitioner. Okay. My child is scheduled for surgery in January 22. I will need 4 weeks to care for her. Would PFL cover this and still allow me to use the remaining 4 weeks later in the year? And the answer is yes. The PFL benefit is payable for qualifying events that occur on or after January 1st, 2022. In this case, the surgery date is the qualifying events, and you can still use the remaining weeks within 12 months for multiple qualifying events. So we have questions. We can open it up for questions. And I guess, Mary Ann, if you can take a look and see if we have anything over and above. I really appreciate everyone's attention, and hopefully this has been very informative for you. And we'll be looking at the Q&A to see if there are some questions that we can answer for you. Mary Ann?
Thanks, Larry. There has been one question that's come in, and it came in at the top of the hour. So I'll go ahead and ask it and answer it myself, Larry.
Okay,
but then I have to jump. So hopefully you could keep an eye on the other any other new Q&A questions that come in. But the question is, can I use these plans if I get injured while on vacation duty? I'm sorry. Can I use these plans if I get injured while on active duty in the military? And the answer to that question is no. So in the event that you are on active duty in the military, your STD, your disability benefits are no longer available to you while on active duty in the military. And as mentioned before, the PFL benefits are for is not a disability benefit for yourself, but is actually to help care for a family member. So if you yourself are injured while on active duty in the military, these plans would not be applicable to you.
The military has plans available for active duty members who get injured while they're on active duty.
Yeah.
Totally separate.
Okay, thanks, Larry. If you don't mind keeping an eye on the chat, that would be great for any additional questions.
Okay, I will. Now we're on until till noon. What happens then? Is somebody going to be stopping the recording, or am I able to do that, or how does that work? Or somebody else kind of, Nedra, are you going to do that?
Hi, Larry. Yes, I'll be stopping the recording when we're done.
Okay, all right, great. Thank you. I'm going to mute myself for just a few seconds here, and I will be right back. So a question has come in, not sure if it has been asked, just wanted to understand. So the short leave disability will cover max 12 weeks. And if there's a qualified event, the employee can still claim for another 12 weeks of paid family leave. I know that's not correct. If you select this 12-week short-term disability plan, then yes, you have 12 weeks of paid benefit for your inability to work on disability. The paid family leave is 8 weeks maximum that can be taken intermittently in as little as 1 day at a time, or as blocks of time as 1 week, or even just one continuous 8 weeks. But the paid family leave is limited to 8 weeks, and it has to be within 12 months of the qualifying event, either the birth of a child, the surgery date for an ill family member, and so forth, according to those scenarios that we covered. There's also really an extensive Q&A available too on the paid family leave. So there's all kinds of different scenarios for you to investigate. And obviously the recording will be available sometime after we terminate the presentation today. Sometimes it takes a little while to compile the recording. Can be just a matter of a half hour or so, might be a couple of hours, I'm not sure, but it will be available probably at some point after the presentation today for you to rehear the presentation and to review those bonding scenarios. Okay, the other question I see is, same person, or sick and PFL combined is max 12 weeks. Now the PFL is going to be 8 weeks maximum. Again, intermittent or as one continuous block, 8 weeks max. And depending on the short-term disability plan that you choose. Now, again, this is assuming that you are not an employee who has the California plan, that you don't have the CASDI plan and are electing one of those short-term disability plans, either the 3-week, 7-week, or 12-week plans. So whatever the disability plan is, those are the maximum durations, either 3, 7, or 12. And then you have 8 weeks after that for the paid family leave. intermittent, or continuous. You're welcome.
Larry, can you hear me?
I can.
Oh, perfect. I believe we might be okay to end the session.
Okay.
I don't see any more questions coming
Leave that
in.
totally up to you.
I know.
Not my call.
We will go ahead and proceed to go ahead and end the webinar. And for those of you who are still remaining, the recording will become available on the Benefits Open Enrollment webpage, and you can check it out there. If you have any other questions, also feel free to inbox the Benefits email inbox. We thank you all for joining us today, and have a great rest of the day.
Okay, thanks so much, everyone. Thank you, Nedra. Really appreciate it.